Before we dive in, a quick note. If you want weekly tools to grow and lead your business, sign up for my free newsletter at stevepreda.com/newsletter. Good day, listeners. Steve Preda here with the Management Blueprint. And my guest today is Noah Hopton, the CEO and founder of Finvisor, helping seed and Series A companies that have outgrown spreadsheets and part-time bookkeepers, but aren't ready for a full-time finance team yet. Their job is to give you the financial clarity to make good decisions at every stage of growth. Noah, welcome to the show.
Yeah, pleasure to be here, Steve.
Well, great to have you here. And I'm very curious about your career and your business and what you built here. And I'm particularly curious about your personal why and how are you manifesting it in your business?
Personal why, it's great. Well, I'll be honest, I didn't go in thinking I was going to be an accountant or run a accounting firm. I studied accounting in school. Eventually thought I was going to probably be more in a kind of front of house sales relationship because I enjoyed like the people parts and like making relationships and meeting people. But, was very fortunate that I found, the consulting kind of fractional CFO world where, I got to find the love of problem solving, creating relationships and creating kind of value for clients. For me, it was kind of this love of helping clients understand their business, helping clients understand kind of what to be thinking around the corner, where it's not just being in-house with one set of books that you're closing when you're at Finvisor. My day-to-day, at least when I started, was probably working with 10 to 12 clients and a month and helping them understand kind of, okay, how did they perform last month? Can they hire a certain number of people? And kind of what's the kind of plan going forward?
Yeah, I mean, that's super helpful. I started life as an accountant as well with KPMG, and what attracted me was to essentially have that language of business that I should be able to understand how a business works and have this confidence of being able to not fly blind, right? That's really, really cool. So how did you evolve from a CFO into a founder? So what was the trigger point for you?
So I was very fortunate. I actually was at a prior firm at one point when I started my career. And they were a little bit of the cobbler with bad shoes, where eventually they decided they had to close shop. And, clients were going to be giving a notice. Me, myself, was given a notice saying, hey, in a week, you're not going to have a job, Noah. And so was really kind of given this moment of life saying like, hey, if I enjoy what I've been doing, do I think I could do it better than the firm I'd been at? And do I want to make this leap into being a founder and starting a business? And so me and I had a co-founder back then, both talked to each other and said, look, we love our clients. We love what we've been trying to build. I think we just need to kind of do a little bit of a refresh and restructuring of how this operates. And so started our own company, but was very lucky that I started with, I had like 30 clients and a team of 4 on day one, which I think most people in the accounting space, start off as like a one-person shop, trying to grow up from 1 to 2 and having it be double, your clients are double your size to get to that. We nicely had, 5 team members and 30 clients on day one. Originally, our vision was just, hey, let's help with the fractional CFO and the bookkeeping, but that really evolved over time as we added additional services and kind of really understood where our clients were having problems in their back office. What are the areas that sometimes the insurance brokers that they had been working with weren't very hands-on, kind of came in once a year. We're asking, our clients were asking us, the CFO, hey, can you help us select our health insurance? And we're like, well, we're kind of doing the broker's job. Why don't we build it our own team? And so that was like one of the first verticals we moved into and added was adding an insurance brokerage and kind of building it from there. Where now not only do you get to have your CFO and accountant help you, you now have like them with the ability to go quote, go to market and help get your insurance in place.
So you are essentially expanding the array of virtual services that you are providing or fractional services that you're providing to your clients.
Correct. Yeah. We really try to like own the kind of full back office end to end. So I think a lot of people deal with, okay, great. I have a bookkeeper. I have a tax accountant. I have a R&D tax provider, and they're dealing with 4 or 5 different vendors that don't really communicate. The client's being the person kind of playing telephone between the two. And we're like, wait, stop. Why is this the solution? Like we should just build a different business where it's all under the Finvisor umbrella. It's all full-time team members that are actually working together on behalf of the client, even if fractionally. So some of our clients only need 5 hours of a payroll specialist, but they need someone to own that role. And they need that person to be able to talk to their sales tax team. Because it's like, oh, we hired someone in a new state. Is sales tax applicable there? And connect those dots where, when you have these disconnected providers, you kind of have a lot of things that can drop because it's like not in people's field of view.
Yeah, I mean it's a great service if you can get a competent team that will take care of your back office, then you can focus on figuring out message to market match and then essentially scaling revenue, and you don't have to worry about that. And you have to babysit essentially inexperienced people that maybe you can afford to hire, but they would not be able to own the job.
Yeah, exactly. I mean, it's kind of do you want to, I think at least when we started in 2014, there was more of a generalist bookkeeper. It's kind of like the typical solution people went with, and nothing against that, but like it's kind of nice to have a dedicated specialist in the different back office areas that you need. I mean, it's like bookkeepers are great. They're usually not your best payroll and HR people. They're not thinking about California last check pay law or thinking about do you think you offer a 401k for if you hire someone in California? Where if you have someone that all they do is payroll and HR all day long and you need Finvisor to help run your payroll, they're going to be kind of thinking about those edge cases and helping you along so that you can just build your business, kind of get to the next milestone and not worry about tripping yourself up because of some compliance, some tax, lack of visibility in your reporting.
Yeah, that's great peace of mind. So this podcast is about frameworks, and I wonder, what is your framework? How do you help your clients, or how do you figure things out, or have what did you develop? We are about 400 frameworks in, so I'm looking for something unique that helps you and easy to explain, 3 to 5 steps maximum.
Yeah, I mean, one of the ones that comes to mind for us is kind of we've really gone with the adjacent expansion framework. So kind of thinking about, okay, great, do really good work, earn your client's trust in one space, and like make it easy for them to approach you. For us, it's always historically been accounting. People think, great, need my books put together. For us, it's really like create a relationship, create trust with the clients, because then as like a step two, you can like listen for their other problems that they're having. Like what other adjacent problems that they have that they're asking you to solve. And then for us, what we really done is then like double down in those other areas. So building out specialists in those other verticals, because once you kind of earn the client's trust, like we're doing accounting and all of a sudden the client has invoicing and dealing with collections, if you can offer them, hey, we can also help you through accounts receivable and help with the collection efforts because we see your AR balance is increasing on your financials, that's where, they're already going to trust, great, I like working with this person. Yeah, let's give their team a try and help them out with another problem that they have. So really for us, it's really been kind of finding those tangential problems, building a team that specializes in it, and then connecting the client with that team member with the expertise. I think the last thing that's more kind of coming to market now is then also been using kind of technology to kind of empower the team. I mean, a lot of the value we've historically had is like you have these people who can own the edge cases or the kind of gray area between payroll, accounting, tax, sales tax. And it's nice now that with technology, you can also kind of build the data infrastructure to both highlight to the client what's happening, but also, kind of help guide the team as they kind of manage the clients.
Love it. So what I'm hearing is number one, number zero, do a great job, right? You didn't
Earn
mention
the trust. Yep.
Okay, so that's also a way to earn the trust, but is it enough to do a good job to earn the trust, or there's more to it?
I mean, I think in anyone like in the service area that we've been in, and you want to be proactive, and I think a lot of bookkeepers, accountants, I mean, even like legal, I mean, kind of name the service area, they're usually always kind of waiting for the client to ask a question to then provide an answer. And I think the goal you should be trying to think about is like, how can I be thinking ahead for the client and then proactively providing guidance for them? This became more natural for us because we sit in the fractional kind of CFO seats. But I think even if you're just doing bookkeeping, you can be catching these things for clients and helping them out. Or if you're just selling P&C insurance and like helping clients with their general liability, you can be thinking about what are the other areas that they might need to be want to get coverage. So I would say like, the more proactive you can be and have it also feel like I think the other thing is like meeting clients where they already exist. For us, like a lot of our clients are on Slack. And so we connect with them on Slack. We are chatting with them as if we were a full-time employee, just because we don't want it to feel different. We don't want you to feel like you're now emailing a general support to not knowing when they're going to get back to you. It's like if you only need fractional level support, it shouldn't feel like it's fractional value or fractional kind of in the actual communication flow.
I love it. So you actually own the function inside the organization. So it feels like you're part of the team or your people are part of their team. So that builds the trust. So do a great job or earn the trust. Number one. Number two, build the relationship. Number three, listen to other problems that they might have. Connect them to other specialists. That's number four. And then empower the team with technology. Number five.
Yeah, that's a lot of, we've at Finvisor grown 60% of our growth comes from client referrals. So I think you're doing something right if clients are recommending you to their friends and network. And so hopefully if someone's like listening to this, if you're not getting referrals, you should be thinking about how do we either create more trust for our clients to be referring us, or how do we become more top of mind when clients are having these conversations.
That's great. So 60% of your growth comes from referrals. So what's the other 40%? How do you drive growth? What drives growth for you? What's the other way to drive growth than referrals?
Yeah, I mean, I think it's also being connected with the ecosystem that you're in. In our space, there's a lot of other kind of like technology partners. So think about like Xero, which is like an accounting software, QuickBooks Online, NetSuite. Your payroll softwares like Rippling, Bill.com, they all have accounting partnerships. And the more you can kind of build with them and grow your team with them, clients will reach out to them and say, hey, like, do you have someone that can help us set up Bill.com or help us set up Rippling? We don't have a payroll team to do our state tax registrations. And so we've seen a lot of good momentum as our, software partners start sending us clients to help us grow. I think the other area is like trying to figure out where you can have partnerships that'll do introductions. I mean, we've been very fortunate in the partner with a number of VCs. And so obviously the VCs we have worked with us because we're on the board with a mutual client. A lot of them will tend to start to kind of build out partnership channels with us. Like, great, we just invested in this company. You should go talk to Noah's team to help with your accounting or help with your fractional CFO. And so kind of finding those tangential operators or entities that like complement whatever you're doing.
So are these primarily personal relationships that need to scale, or do you have a way to scale this across other people in your organization? This ability to develop partners, or is it mainly you?
It depends on the role. Like a lot of our fractional CFOs on the team continue to build out relationships. And like, I mean, I would, probably 40% of our new clients that come through a channel that's not through me. And so like there'll be other people on our team that have kind of built a relationship with another VC or another software tool. I think one of the key things that I think we've always focused on is hiring people that are very, I don't want to say doers might be the wrong word, but like they can self-manage, be project managers. Because if you find the right people who kind of have that, like can take a step back and look at the bigger picture. And I mean, sometimes people come to Finvisor and they don't realize we ourselves are a business. Yes, you're doing accounting like you were in house and like getting the books closed, but like, if you do good work and you're realizing clients are having problems, you kind of have to think around, hey, how can I help clients out more and also help Finvisor make a win-win? A lot of times when we're hiring, we're trying to make sure we find people that kind of have that type of drive to want to like kind of continue to build and help us internally and not just do one part of the puzzle that they're in. That might not be the most direct answer, but I would say it's like, a lot of it's like hiring in terms of like making it so that it's not just me leading the growth, but me building a team that can help lead the growth outside of just me.
Yeah. So how do you share the context so that your team members can connect the dots as well as you can? What is your approach to that?
There's a couple ways we've done it. One way we've done is we use a note taker that then feeds into our CRM. And so for all client communication, if they meet with us on Zoom, if they meet with us on Google Meet, the transcripts are getting put into a centralized hub for us. It also talks to our own kind of CRM in terms of like what we're doing for the clients. And so at any point in time, someone could ask, hey, what's going on with this client? And understand, great, this is what the payroll team talked to them about this week. This is what the CFO team talked to him last month about. These are the problems that they bring up. So we can kind of really capture that information, but that have to be like, orally provided every single time and like not having to be kind of statically provided over just like a chat or an email to the team. There are some moments when it's useful to like give the team a larger update, but I think in general, it's good to kind of figure out a way to kind of capture the essence of what you're doing for your clients so that the team can then, in a AI chat specific way, like talk through, hey, great, what's going on with this problem? What are the, with this client? What are their needs? What has changed in the last 6 months? Who's working on the client? I mean, I'll have a VC that we'll talk to that's like, oh, we're looking to be investing in like the CPG space and this type of vertical. Do you have any clients? And we're at a point now where I don't know every client. I mean, I usually have an idea about most clients, but there's definitely some clients in terms of what's happened in the last 6 months where I don't talk to all 200 clients, but I can talk to our central hub to kind of gain that information, understand, okay, which client is looking to fundraise and might want to be connected to this VC because it's a nice connection of the dots. They're looking to invest, they're looking to raise. We always do like brown bags too. I mean, like we're a distributed team, so I think you have to kind of be a little more intentional with how you educate the team. And so we'll have weekly meetings where we'll kind of walk through either, new technology, new changes in what we're offering, new positioning, and just kind of continue to educate the team at like a more kind of format like that. I think the other thing we've done to help the team understand like what's going on is we try to, similar to how we talk with clients, we try to also make that information like as accessible as possible. And so it's not the team has to log into a pretty outdated CRM to pull information on their client. It's either existing there kind of in the Slack conversation, or it's on a more modern tool like a Notion where you can easily search and find the information you want. So
basically, you are managing and harvesting your data and using that to feed to people information as to how they could develop partnerships. This is what I'm hearing.
yeah, and I think a lot of it's also trying to figure out what playbooks. When you realize a playbook or a process is repeatable, to kind of better document that, and then you're educating the team around, hey, this is the best way to, like for our fractional CFOs, like we want to be in the board meeting. If we can be in the board meeting, like A, we can help the clients answer questions around their finances easier, and B, it's good to have visibility around like what the board's saying around the business and where they want to go. As well as then obviously the VCs are going to say, oh, great, this is Ian at Finvisor. I should, if he reaches out to me around partnership, they're going to have better understanding of like what we do because they've been in a room with us, or been in a virtual or real boardroom with us.
So you're basically sharing the playbook so that they have a better understanding of what they can refer you for.
Correct. Yeah.
So switching gears here, Noah, what's one thing that you're trying to actively figure out in your business right now?
I mean, the question everyone is trying to figure out is, at least in my space, is how are they going to want to use AI in some kind of fashion? I mean, I think that's the kind of $1 million question everyone keeps talking about, is AI in accounting, AI in finance. Right now, we are really structured in how we're trying to use it in its application. But I think the question I have is like, what's the next year? What's 5 years going to look like as this technology kind of gets more legs and more trust behind it? We're pretty intentional around like kind of what we're building out and how we're using some of the newer technology, like with AI. But I think there's a lot that's, at least for me, it's like you got to continue to iterate. Like the world today feels different than it was 3 months ago, and I'd say for most of Finvisor's history, and this has been 12 years, it's not felt like that. We're like, oh, a year later, it might feel marginally different because we maybe we're 20% bigger or whatever has happened. But now I think there's a lot more excitement and unknown around kind of technology and how that can either make people more efficient, help highlight and surface better issues that clients might need to talk through. But I don't know. I also feel like we're in a moment where everyone's trying to throw AI into every technology. So we're also trying to still stay true to who we are, which is like people first, relationship first, technology powering us, not being the solution.
So as you're scaling AI to improve the information that your people have, your CFOs have, that presumably is going to lead to people doing less of the mechanical, repeatable tasks and more of the judgmental tasks. So how do you scale judgment as you are scaling the impact with AI?
On our side, I think it's A, trying to organize and structure the data coming in. B, trying to create tooling that is not like unique per customer, but like built in a way that can be customized per customer. And a lot of the firms I talk to that are like in the Finvisor space, they kind of just go this blanket, turn Claude on to every fractional CFO, let them connect it to QuickBooks and try to figure out their own playbooks. Not how we ever like run the business. We never said like, oh, just hire, like we don't just hire accountants and let them run the accounting and see how the output is. We're more kind of figuring out what actually is useful for review. I mean, right now, I think most of the AI is been helpful around just quality. It can definitely check to make sure things are being very consistent, to make sure that edge cases are being caught. I think we're going to get to a future state where it's not only kind of making sure that quality is at the 95th percentile of confidence, but then able to maybe give you those like visibility around, if it's CAC, LTV, churn, metrics that would just take longer to pull, where your fractional CFO is maybe spending hours reviewing your Stripe data or your Shopify data to come up with a conclusion, and giving them more, cutting out, say, 40% of that, like kind of just like data cleanup layer, where it's like, okay, now they have the tools to just dig in and understand like what is the underlying problem here, besides getting, a lot of times just cleaning up the data in the beginning and getting everything organized. So currently at least my thesis is that it's going to make us be able to manage more clients, because some of the day-to-day, honestly, busy work, but the work you have to do to get to the exciting parts of our job will be a little bit more automated and less, manual, and like how the process is being, how you're pulling data out of like your Stripes or your Shopify's or your CRM or your NetSuites.
So does it mean you will have different type of people who maybe are higher level thinkers, or you think you can elevate the current team to that level?
Yeah, so I think sorry, and I know I was originally answering this in like the fractional CFO lens, which I think most of our fractional CFOs, or they all are kind of at the top of that, like of that pyramid of org structure. And so for them, it's just helping them kind of have cleaner data, have them have better visibility around like kind of the actions that they should be reviewing and talking with the client around. In terms of like the general, for us, my back office finance team, I do think that a lot of the more generalist staff accountants, AP specialist roles will not be doing a lot of the day to day in terms of like just blocking and tackling. If your bank recs are, if your client has 1,000 transactions a month on their bank and credit card, that same accountant who historically in QuickBooks Online is clicking OK, 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 reviewing every transaction, coding it. 80% of those transactions will just be coded like in real time. They'll get pushed in. And so you'll get to them being able to do like but the 20% that requires like human judgment. And I think for me, it's like, can we continue to empower those people to be more impactful in that 20%? Like, are they the right people for that 20%? percent We've always aimed to hire people that are kind of proactive, broader thinking. And so I think, we have the right team to step into that. I think if we had been in like let's say a BPO model where you have an outsource accounting team and it's people who are really just kind of coding at a very basic level, I'd be more worried because I think getting those people to step up to be more resourceful around like the edge cases is difficult. But that's not how we've kind of built Finvisor historically. We've always tried to find people that are a little bit more, I'd rather find someone that's a A+ player than find someone who's a B player just because like there's a savings on the cost structure. I'd rather have the right people that can like swing, hit the bat, 80% of the time when they're at bat versus just the person is the right. Yeah. So
Yeah.
wrong baseball analogy there, but yeah.
I understand. So you have the A+ people. So maybe the people who are doing more of the bookkeeping type services, their job may be automated, but your A players, they're gonna have best in class information and they can serve more clients that way.
Yeah, and I still think that, if you think about the kind of, okay, if you're on a controller, if you're working house at accounting and you have a bookkeeper, a controller, it's still helpful. I mean, depending on the size of the company, like if you're a small company, yes, you probably won't need that bookkeeper. The controller can deal with the edge cases and kind of close the books. But at a certain scale, you'll still want to have that kind of junior resource aiding the controller so that they can focus on more of the higher level work or the more strategic work. I think they'll just be able to do more with less if it's the right person. I think there will be people who, if they aren't good at, being on the toes, figuring out the edge cases, they won't be the right fit, and then like AI will probably somewhat replace them. But I think there's a good opportunity for people who can think more strategically or think kind of bigger and not like they to be a CFO. They could just be a really smart kind of edge case handling bookkeeper where they'll just be able to handle 3 times as many clients than they were when they have to code every single transaction.
Okay. If you had a magic wand and you could fix one thing in your business in the next 12 months, what would that be?
I mean, the one area that I think we have not, maybe we like didn't prioritize a lot because growth, referrals have always been our like biggest growth is I don't think we've done a great like SEO, AEO, sales build out. Like our paid advertising, I would say is not our like most successful part of our business because it's been not the top priority of our business. But I wouldn't mind having a magical wand to have someone help kind of clean up some of the SEO, AEO visibility, because I know clients love us. We do great work, but I don't think we're kind of showing up in a way that I like to show up, both from like an SEO, AEO perspective. So that'd be my
Yeah.
use of a wand.
Yeah. Yeah. Love it. So, who are your ideal customers? Who do you want to knock on your doors? Is it venture-backed companies primarily, or you also work with private company founders? Who are your sweet spot customers?
A lot of our clients are going to be, let's say, 5 to 50 employees, where they don't need a full-time back office or a full-time accountant, full-time CFO, full-time payroll specialist, but they need someone to own that role. And that way we can kind of put together the unique kind of group of team of Finvisor to support them. We've intentionally made ourselves pretty modular. So we do work with, the largest group of clients of ours are kind of in the tech VC world, but we also have a lot of just SMBs, like law firms, maybe some beauty businesses, I mean, really other professional services business. I would say, although on average, if you threw a dart at the Finvisor client base, you'd see kind of probably a startup. I would say we're starting to see more SMBs that are just more traditional businesses that maybe don't have VC funding. They still need help with their accounting, bookkeeping, and kind of modernizing their back office. So it's a bit of both, I would say, but probably, most of our clients are going to be that 10 to 50, 100 employee range where they're complex enough that where they kind of care about their financials and understand what they spent last month, think about where they're going and kind of how they're going to get to there. I think sometimes earlier companies, sometimes it's just a little too early. It's like if you're a 1-2 person idea company, and there's a reason why people kind of think about their financials on a cash basis because they can think about their 5 clients that they're working on. They can, their bank balance ties pretty closely to their financials. It's not a huge difference between the two when it's like a sole prop. But as you start to kind of evolve, that's where Finvisor can provide a little more value. All of our clients, we do like a cool accounting. So we're recognizing your revenue and your costs over the life of the service, which I think as you start to actually grow and build, that's helpful. But obviously, if you're at day one, it's less as impactful because it's more living day to day, week to week, month to month.
Okay, so if we have these kind of companies, which we do, in our listeners, and they hear about this and they want to fix their back office and outsource it to a reliable person who can help them own the functions and give them good advice, what's the good entry point? Where should they go and how can they connect with you personally as well?
Yeah. Hello at Finvisor comes to me and the sales team. Probably a 95% confidence you'll talk to me if you reach out, since I still love to connect to most new businesses coming through the door. I think the other area where I would just wanted to kind of call out that could be helpful for businesses, PEOs are great, but I think at some point clients need to kind of graduate from the PEO, and Finvisor is kind of uniquely positioned to be both your insurance broker and help you quote your large group plans and provide a payroll and HR team that can help you leave the PEO. And so for a lot of our clients that are, once they pass that 100 employee count, where it's like, great, we now qualify for a large group plan, which might be better rates than you're actually getting from the PEO. They just don't have the team and the bandwidth to like get off of the PEO. And we'll usually complement these larger companies saying, great, let's quote a large group for you. We'll also put together a transition plan to go register you in 20 states where your employees are currently located. Make sure you get your workers' comp, your employer practice liability insurance in place. So you're kind of there's no difference, apples to apples from being in the PEO to running your own payroll, but help with that kind of transition because that's where I think, I'm just surprised. We'll just see companies that are in the, hundreds of employees still on a PEO where the savings could be in the, hundreds of thousands for them to leave, but they just don't have the team because they've been on a PEO historically, and they've never thought the team's never had to do state registrations. So they don't know how to do state registrations. And so they're not usually going to look at like an alternative to a path that gets them off of that structure. Where I think we can at least review with them and help them out if it's a good fit.
And just to remind our listeners what a PEO is, in case they don't know.
Oh, sorry. Yeah, PEO is a professional employer organization. So if you've heard of like TriNet, JustWorks, in the health insurance space, there's 4 types of ways you can get health insurance. Most companies go small group when they're really early, when it's the early days because they're like state mandated. Anyone in California, if you're under 100 employees, the same rates you're going to get for my company would be the same rates Steve would get for his company for both under 100 employees, and asking, Blue Shield for a quote from our zip code. That's small group. Level fund is a little bit different. It's where carriers will actually quote specifically your health group. There's large group, which is also somewhat similar, but there's just more risk at the large group to be a certain size. And then PEO is where, great, you're a 10-person company. You don't have enough people to get kind of that large group health insurance, which has usually a discount to it because it's now pooled across hundreds of employees. But what the PEO will say is like, we'll hire your team. And so we'll be your employment vehicle. Instead of you hiring 10 people directly and getting health insurance that's only for 10 people, we'll hire your team. And then we'll give you unique rates that are like across the 10,000 people we have. They're really popular in your California and New York locations where health insurance is really expensive. But I think it flips. So once you get to like, above 100 employees, you then can get your own large group rates, which are like the same type of rates the PEO is getting, but the PEO is usually marking up their rates that they're actually getting based on in their business. They make some spread on it where you could get yourself. So
that makes sense. Okay. So if you listen to this and you're building maybe a venture-backed startup or even just being a founder of a professional service firm, a law firm, a small business, 10 to 100 employees, and you don't have yet the funds to hire, or maybe you don't need full-time CFO and insurance advisor and HR people and other people that will be sitting in your functional seats, then reach out to Noah and Finvisor and check out what they can offer and see the services that you can get there. So thanks, Noah, for coming on the show and sharing your expertise. That's fascinating how this field is moving, and and how you are tapping into technology and focusing on the highest quality CFOs to help your clients. And if you enjoy this conversation, stay tuned. Follow us on YouTube, Apple Podcast, or wherever you get your podcast. Make sure you don't miss an episode. We're coming every week with exciting entrepreneurs. So thanks for coming, Noah, and thanks for listening.
Thanks, Steve. Appreciate it.
That's it for this episode. Keep moving your business forward. Subscribe at stevebreda.com/newsletter.